Hello and welcome to Behind the Headlines for the week ending June 19, 2020. I'm Michael Curran from the Ottawa Business Journal. Behind the Headlines is a new-ish podcast where we take a look at the top local business news headlines of the week with OBJ's editors. Let's meet them now. We have Peter Kovessy joining us this week and David Sali. Hello to both you gentlemen. In today's podcast, we're going to take a look at three stories. First off, a tech company based in Canada that is seizing the day in this pandemic economy. Next, we're going to take a look at a possible trends of companies downsizing their office space. And the third story of the week will be a digital agency based here in Ottawa that is sharpening its business focus. So let's go right away behind the headlines with story number one, which is Kinaxis, a publicly traded, one of the few publicly traded tech companies that is still left in the city. And we're always on the lookout for companies that are really going to emerge in this pandemic with more momentum and a stronger business model. So, Dave, Kinaxis made a big transaction this week. Tell us about that transaction.
Yeah, absolutely, Mike. You want to talk about companies that are really thriving during the pandemic. Well, Kinaxis is certainly one of them. It doesn't get the same headlines as its flashier publicly traded cousin downtown, Shopify, but it is really making a move over the past few months. What Kinaxis does is it uses big data analytics, just like we do, to determine what the top stories are from the week. Well, they use that to help companies manage their supply chain. So they take all this data, they mine all this information about sales and inventory use and all of that to make sure that their clients, and we're talking big companies here, Ford, Nissan, Procter and Gamble, Unilever, to help them make sure that they don't have too much of the stuff they need to make their products, while at the same time making sure that they never run out of the stuff they need when demand really spikes. And as you can imagine, during the pandemic, everybody's looking for an edge to make sure they're operating as efficiently as possible, and Kinaxis is doing that. So this week, they made a big jump to move into a vertical they haven't really been in yet, and that's retail. They paid $60 million US to acquire a Toronto company named RubaCloud, which basically uses machine learning technology, much like Kinaxis, to help large-scale retailers. So think supermarkets and household goods sellers, to make sure they have enough inventory to keep their shelves stocked. So as you can imagine, a supermarket wouldn't want to run out of lettuce or tomatoes or ground beef, but at the same time, it doesn't want to order so much that it ends up having to throw out hundreds of pounds of the stuff. So that's what RubaCloud does. It helps them predict how much inventory to order. And now Kinaxis is bringing that capability inside their tent. And John Sicard told me that he's really pumped up about this deal just because of the potential of this market. He says retail could end up being a bigger component than all six of its current verticals combined. I mean, that just tells you how important the retail market is. And Kinaxis, it was already on pace to exceed 200 million in revenues this year, and that's only going to go up now. So I'm really looking for big things ahead for Kinaxis.
Okay. So, Peter, let's bring you into this Kinaxis discussion. First off, nice haircut. You teased it last week, and now we get to see the final results. So that's good. But anyway, getting back to Kinaxis. So as Dave said, Kinaxis is involved in supply chain management analytics, and they've moved into retail. Why do you think that's so significant?
Well, one is just the size of it. As Dave mentioned, this does have the potential to be really transformational for the company as it expands its scope. The other thing, though, that you sort of alluded to in your introduction is just the timing of it. COVID-19 has really put the spotlight on companies' supply chains. Mike, you and I were on a call with a company based here in Ottawa this morning that was telling us that almost every of its purchasing decisions now includes a detailed discussion about where is the product coming from, what are the risks to the timeline and deliveries of it. Even as the health crisis subsides, these supply chain issues are likely going to be continuing to linger for some time. So that really is going to increase, I think, the market and the attention paid to solutions such as the software that Kinaxis develops.
Yeah, I think Kinaxis is going to be a very interesting company to watch this year and beyond as it moves into new verticals. So let's go to story number 2. Dave and Peter, we've talked a lot in recent weeks about commercial real estate. And, thousands, if not tens of thousands of people are working from home right now in Ottawa. And there's this big looming question about whether companies will keep their office space, change their office space, go back to their office space. We had the big Shopify story. So Peter, let's start with you on this. We have one company, also based in Canada, I believe, Centronic, that is making some plans for their office space. What are they doing, Peter?
So Centronic is a Swedish technology design firm that's really been growing in a big way in recent years in Canada. A year ago, it was approaching 300 employees that had grown to about 50,000 square feet over 2 locations in Canada, and really had its eyes set on expanding to 500 local employees. However, COVID-19 is really affecting those plans, and now it's looking to sublease up to 40% of its space in Canada amid a hiring freeze. Many of its projects that it had in the pipeline are being placed on hold as its customers rein in their spending and delay R&D. So this is, I think, one of the first concrete examples we're seeing of potentially the more longer-term impact that COVID-19 could have as far as a slowdown on the wider economy, particularly in the tech sector.
Today, let's get your take on this. You're in regular contact with many people in the commercial real estate industry. So Centronic wants a sublet. What are you hearing from real estate experts about the potential trend towards subletting?
Yeah, absolutely, Mike. What I'm hearing is that we're going to see a lot more of it. I've talked to a couple of veteran brokers who say that in a normal year, they might get maybe half a dozen requests from their clients to, look at subleasing. They've already had that many or more just in the last 3 weeks. So this is going to be a real strong emerging trend. I think there's no doubt about it. The people I'm talking to are just saying that everybody's kind of in a state of flux right now, wondering what the workplace is going to look like in 6 months, a year. Are workers going to become so comfortable with being able to work remotely from their kitchens and living rooms that they're going to say, look, I want to be back in the office sometimes, but I also want to have that flexibility to just stay home sometimes. And what is that going to mean for for the overall footprint that their employers are going to require? If people can share desks, or they can get rid of some cubicles because that person now is working from home most of the time, that's going to make a big difference in terms of overall demand for space. And a lot of brokers are saying that companies, at least in the short term, are really giving strong consideration to subleasing, and some of the potential benefits they could get from renting out space. So we'll have to see just where this goes, and I think it's going to take a while for the trend to fully establish itself. A lot of landlords are saying, you know what, let's wait 12 to 18 months. That's when we're really going to have a strong idea of in the longer term of where things are going in terms of work. So there's going to be a lot of upheaval, I think, for the next little while, and vacancy rates could be affected. There's no doubt about it.
Yeah, the interesting thing when I think about this is that any business deal needs a buyer and a seller. So if everyone's going to sublease their space, that's one thing. The question is who's going to take the space. I don't know if there's going to be a lot of takers, but as you said, Dave, we'll have to wait, months or longer to determine that. So we're going to go to our final story number 3, about a company called Iversoft, a company that's caught my name for several years. Well-known female founder in this city. And in fact, Iversoft has sort of, I say, 2 40 under 40 recipients. One its CEO, Graham Barlow, and Shauna Traguna, someone who was recently working with Iversoft, but is kind of back on her own. But anyway, Dave, tell us about this digital agency. So this is a company that helps people, with digital maturity is one of the words they use about. Tell us about what Iversoft is doing and how they're sharpening their business focus.
Well, exactly, Mike. As you say, they're all about digital maturity, which means they help companies craft their digital presence, whether it's building a website, helping them make a new app, all that kind of stuff. It's what we've been hearing about for years. It's an emerging trend, and they're really taking advantage of it. They help companies, everybody from Audi to Tamarack Homes, and some U.S. clients as well, do this sort of stuff. And recently, they've kind of reinvented themselves. 6 months ago, they were really on track to kind of expand their customer base and their service offerings. They had a digital marketing arm that was led by Shauna Traguna, that was kind of on the path to making them a one-stop shop. So not only would they build your app, but they would also help you do your social media marketing. Well, since the pandemic hit, they've taken a closer look at things, and they've decided to kind of pare back, kind of rethink where they're going, and in a bid to sharpen their focus, as Graham Barlow told me earlier this week. So as part of that, they've kind of spun off that digital marketing arm that Shauna led. She has left Iversoft to start her own agency and has taken most of the marketing business with her. That's allowing Iversoft now to focus on what Barlow says it really does best, which is web and app development, really crafting that digital presence from that perspective. And Barlow said it wasn't an easy decision. It never is, to kind of have to kind of say goodbye to people, but in a sense, he said they're still going to be working with Traguna and her team, just not under their roof. So he says that's going to help. He feels both Iversoft and Traguna in the long term. The other thing Iversoft is doing is looking at, we were just talking about companies considering subletting space. Well, Iversoft is thinking about getting rid of its space. It has a 12,000 square foot office in Overbrook that it's currently renting. It's taking a look at possibly vacating that space and just implementing a complete remote work strategy. Its staff has been working from home since March already. Barlow says that's going very well. A lot of staff are saying, you know what, we're actually more efficient working from home. We like it. Should we not think about continuing this in the longer term? And the other thing Barlow mentioned is that a lot of Iversoft's employees already come from other parts of the countries. They recruit the best and brightest no matter where you live. And so they say that that's actually giving them a leg up, and that continuing to go virtual by default just, helps them hone sort of virtual culture, as he calls it. And at the end of the day, that he feels like that's going to really help them win in the escalating war for talent. So we'll see where this goes, and we'll see just what Iversoft decides to do over the longer term. But clearly, another company that's really evolving and taking a closer look at its workforce, as the pandemic has evolved.
Yeah, I think just picking up on that point, I think what's interesting with the Iversoft story is that they're probably one of hundreds of companies that are looking to sharpen their focus. And by the way, that's a very healthy thing to do for a company, especially in times like this, to rethink themselves. And then the second point, just there on the remote workforce, it almost sounds like that Pythian model, right? That Paul Valet had way back when, where he was going to hire superstars, and it didn't matter where they were. Anyway, we're going to start wrapping up, and Peter, you're going to help us take a look ahead. What's on the schedule coming up, Peter?
Well, one of the big projects that OBJ is tackling in June is the Welch LLP Ottawa Business Growth Survey. So this is a project that's now in its 6th year that we go out and ask local business leaders to share their insights into their confidence in the local economy, the confidence in their markets, as well as some of the issues and challenges that they're facing. In 2020, arguably the Ottawa Business Growth Survey has never been more important. We've taken a specific approach this year to be asking Ottawa's business community about how the pandemic has both affected their business, as well as to share their insights into the opportunities and challenges ahead. So again, we're asking our audience to help us with this really important editorial research project. The easiest way to participate is by going to obj.ca/events, and there's a link right there to take the survey. The other really exciting project that we're tackling is the 40 under 40. I know we've talked a bit about that in the past. This week, we started to roll out some of the profiles of this year's recipients, and that's going to continue in the coming days, culminating with the special Ottawa Stronger Together broadcast this coming Thursday.
Thanks for that look ahead, Peter. A quick point on Ottawa Business Growth Survey. I couldn't agree more that in a state of economic uncertainty, it's really important for local business owners and CEOs to be taking this survey. The data from this is used by people at City Hall, Economic Development, the Board of Trade, so on and so forth. So really important for us not just to have anecdotal evidence of what's going on, but some factual evidence. And last thing, again, thanks for plugging the big broadcast next week, Peter. So we will be presenting the 40 under 40 in a really unique way. It's called Ottawa Stronger Together. It will be a broadcast. If you're a Rogers cable subscriber, you can check it out on Rogers Channel 22. If you're not, it will be on YouTube Live, and you can go to ottawastrongertogether.ca for viewing details. Well, that's it. All the time we have for this week. Thank you very much, Peter. Thank you, Dave, for all the great work you're doing and sharing local business news. And for our audience, as we wrap up, just a reminder that you can stay connected to all the business news by visiting obj.ca. That's our website, updated regularly throughout the day. You can subscribe to OBJ Today, which is a weekday email newsletter. And this podcast continues to be available on our YouTube channel. And it's also available in audio format on Spotify. That's all the time we have for this week. For Peter Kovessy and David Sali, I'm Michael Curran signing off with the Ottawa Business Journal. Please stay connected. Cheers.